Tired of guessing when you can retire? Retire early. With dividends.com gives you the tools to take control. Screen over 400 dividend stocks, track your portfolio in real time, and sync your brokerage with one click. Use our FIRE calculator to see exactly when your dividends will cover your bills. Free to start, no credit card required. Visit retireearlywithdividends.com and start building your passive income today. Hey guys, how's it going? So today I want to talk about something that's been on my mind lately with Bitcoin. And I think this is going to be really useful if you're holding IBIT or BTCI or thinking about adding positions. We're going to look at where Bitcoin actually finds support based on miner economics. Isn't just technical analysis or sentiment. This is actual cost basis data that creates real support levels in the market. Let me pull up my portfolio real quick because I want to show you guys what I'm holding. So you can see here I've got about 1,700 shares of IBIT. That's at a $38.87 price right now. And my average cost is around 54 bucks. So yeah, I'm down on this position. Not going to sugarcoat it. Then over here I've got BTCI. This is the NEOS Bitcoin High Income ETF. I'm holding about 3,400 shares of this one, trading at 34.57. My cost basis on this is 52.06, so also underwater here. But here's the thing, and this is what I want to talk about today. When I look at where Bitcoin is trading right now and where miner cost basis sits, I'm actually getting interested in adding to these positions. Not financial advice, obviously. This is just what I'm thinking about doing. So let's talk about miner cost basis and why it matters. Bitcoin miners, these guys are running massive operations, right? They're spending real money on electricity to mine Bitcoin. And here's the key insight: can't mine at a loss forever. It's just basic. It costs them more to produce one Bitcoin than they can sell it for. They eventually have to shut down their machines or go out of business. The data I've been looking at shows that right now, depending on electricity costs, miners are breaking even somewhere in that $59,000 to $74,000 range for Bitcoin. Now that's a pretty wide range, and it depends on where these miners are located. If you or Paraguay, where electricity is like to 6 cents per kilowatt hour, you can mine profitably at lower Bitcoin prices. But if you're in Germany or California, where power is expensive, you're already losing money. What's interesting is that historically, and I've been looking at the charts on this, when Bitcoin drops down into that miner cost basis zone, you tend to see a floor because what happens is the least efficient miners start shutting down their rigs, the hash rate drops, and that creates this natural support level because supply gets constrained. The research I was reading showed that after these minor capitulation events, where a bunch of miners basically give up and turn off their machines, Bitcoin has historically rebounded pretty hard. The data points to something like 121,000 as the next energy value target. Now, I don't know if that's exactly right, but the pattern sense to me. And here's where it gets interesting for IBIT and BTCI. If we're sitting near miner cost basis right now, and I think we are based on where Bitcoin's trading, that gives me some confidence about downside risk. Could Bitcoin go lower? Yeah, of course. But the lower it goes, the more miners shut down, and that creates its own support mechanism. Let me talk about the power law for a second, because this ties into the whole picture. The Bitcoin power law is this logarithmic model that some analysts tracking, and it's been pretty accurate over the years at predicting long-term price movements. The way I understand it, Bitcoin's price has followed this power curve based on time since inception and effects, according to the power law model. And again, this is just one model, not a crystal ball. Bitcoin should be trading higher than where it is right now. The model suggests we're actually below the historical trend line, which could mean we're either going to see a recovery back toward that trend or the power law is breaking down. My thought is that if the power law has held this long, there's probably something to it. When you combine the power law with minor cost basis, you get this interesting picture. You've got fundamental economic support for miners around 60 to 74,000. And you've got this historical price models suggesting Bitcoin should be trending higher over time. To me, that's a decent setup for considering adding to positions. Now let's talk IBIT versus BTCI. See, these are very different products, even though they're both Bitcoin exposure. IBIT, that's the iShares Bitcoin Trust. This is a straight Bitcoin ETF. You're basically buying Bitcoin exposure through an ETF wrapper. No income, no yield, just pure price appreciation or depreciation based on Bitcoin's movement. I've got that 1,700 shares, and honestly, I'm viewing this as my term Bitcoin hold. BTCI is completely different. This is a covered call ETF on Bitcoin. What they're doing is holding Bitcoin exposure and then selling call options against it to generate income. The yield on this thing, let me check, is it's showing 0.47%, but that's not really accurate because of how they calculate it. The actual distributions I've been getting are way higher than that. Looking at my account, I've received over 10,000 in dividends from BTCI on a position that's worth about 118,000 right now. So real income from this position, even though the share price is down, that's the trade-off with BTCI. You're giving up some upside because of the covered calls, but you're getting cash flow. The way I think about it is IBIT is for capital appreciation. If Bitcoin goes to 100,000 or higher, I want full exposure to that move. BTCI is more for income and volatility smoothing. Yeah, I'm capping my upside with the covered calls, but I'm also getting monthly distributions that I can either spend or reinvest. Right now in my portfolio, I'm heavier in BTCI than IBIT. It's about 118,000 versus 67,000. And honestly, that weighting makes sense to me given what we've been seeing with Bitcoin. The volatility has been insane, and getting paid while I wait feels better than just sitting on pure price exposure. If I were to add to these positions right now, and I'm thinking about it, I'd probably add more to IBIT just to rebalance a bit, because if we are near that level and if the power law is going to reassert itself, I want more pure Bitcoin exposure to capture that move. Let me show you some of the actual miner data because it's pretty fascinating. The top mining rigs right now, like the Bitmain S21 XP Hydro, these things are doing 473 terahash per second and using about 5,676 watts. At 8 cents per kilowatt hour for electricity, miners can make maybe $16 to $18 a day net profit per machine after power costs. But here's the thing. If Bitcoin drops another 20% from here, those daily profits get cut in half or disappear entirely. And when that happens, miners start shutting down. That's the support mechanism I'm talking about. There's also this interesting geographic component. Miners in places like Texas or Paraguay, where electricity is super cheap, they can stay profitable at much lower Bitcoin prices, but miners in high cost areas are already underwater. So you get this gradual capitulation where the weakest miners drop off first, then the next tier, and so on. I was looking at Marathon Digital, ticker MARA. These guys are one of the big publicly traded miners. Their stock has been getting hammered because of Bitcoin's price action, down from like 23 bucks to under 8 bucks. That tells you the market thinks mining is going to be tough for a while, but it also tells you we might be near a bottom, because if the biggest miners are trading this cheap, the market's probably pricing in pretty mystic Bitcoin scenarios. The other thing I've been thinking about is how to time entries on IBIT and BTCI. Like, do you buy now or do you wait for more downside? My approach has been dollar cost averaging. I'm not trying to catch the exact bottom because I don't think anyone do that consistently. Think we're in a zone where adding makes sense if you believe in Bitcoin long term. With miner cost basis around 60 to 74,000. Let me look up where Bitcoin is actually trading. Okay, so Bitcoin's probably in the mid to high 80,000s based on where IBIT is priced. So we're above miner cost basis right now, but not by a huge margin. If Bitcoin dropped 10 to in that zone where miners really start feeling, um, that's when I'd probably get more aggressive about, because at that point you're buying at a price where the fundamental economics of Bitcoin production are creating support. It's not just hopium or technical levels. It's actual businesses making decisions about whether they can afford to keep mining. Let me talk about the covered call strategy with BTCI for a minute, because I think some people don't fully understand what they're getting with these income ETFs. When you own BTC, the fund is selling call options on Bitcoin futures. Those call options generate premium income, which gets distributed to shareholders monthly. The trade off is that if Bitcoin rips higher, the fund's upside is capped at whatever strike price those calls were sold at. So, in a massive bull run, you're going to underperform just holding Bitcoin directly or holding IBIT. But in a sideways or moderately up market, you can actually outperform because you're collecting that premium. Looking at my BTCI related position, cost basis 52.06, current price 34.57. Yeah, I'm down about 34 on share price on my, but I've collected over 10,000 in distributions on my. So my actual loss is less than it appears if you just look at the share price. And if Bitcoin recovers, even partially, I'll keep collecting those distributions on the way up. The question I asking myself is, like, am I better off in BTC income or in IBIT with full upside exposure? And honestly, I think the answer is both. That's why I hold both. They serve different purposes in the portfolio. If you're tracking positions like this, by the way, shameless plug here, you can use the portfolio tracker at retireearlywithdividends.com. I actually use it myself to track all my cost basis and dividend income across these positions. It's free and it makes it way easier to see your actual returns when you're dealing with income ETFs where the distributions affect your total return. So, where does all this leave us here thinking? Bitcoin is trading above miner cost basis, but not by a huge margin. The power law suggests Bitcoin should be trending higher over time based on historical patterns. IBIT gives you pure Bitcoin exposure with no income but full upside. BTCI gives you Bitcoin exposure with income but capped upside. For me, I'm holding both and probably going to add more if Bitcoin drops into that 60 to 75,000 range, because at that point you're buying at prices where miners are at or below break even, and historically that's created good entry points. The other thing I'm watching is hash rate. When you see rate dropping significantly, that tells you miners are actually shutting down their machines. That's a contrarian signal that we might be near a bottom. I haven't seen that yet, but if it happens, that's when I'd get really interested in adding aggressively. One more thing on the power law. I know some people think it's just curve fitting and doesn't mean anything. And yeah, maybe it is. But the fact that it's held for this long through multiple cycles makes me think there's something real there. Whether it's network effects or adoption curves or just self fulfilling prophecy, the power law has been a decent guide. The prediction I've seen based on the power law is that Bitcoin should be in the six-figure range over the next 6 to 12 months if the model holds. Now, that's obviously not it, nothing in investing is, but it gives me some framework for thinking about upside potential. Combining that with minor cost basis support, I feel like the risk reward at current levels is pretty decent. Yeah, Bitcoin could drop another 20%. But if it does, we're in that zone where economic reality creates support. And if the power law reasserts itself, we've got significant upside from here. So that's my take on Bitcoin right now and how I'm thinking about IBIT and BTCI. I'm not making any moves today, but I'm definitely watching these levels. If we get down to that minor cost basis zone, I'll probably add to IBIT to get more pure exposure, and I'll keep collecting those BTCI distributions and reinvesting them into my core holdings like SCHD. All right, guys, hope that was useful. Let me know in the comments what you think about Bitcoin here. Are you buying, selling, or just holding? And if IBIT or BTCI, what's your strategy with those? Always curious to hear what you guys are doing. If you found this helpful, hit that subscribe button. We do these portfolio updates and market analysis videos regularly, and I try to share the actual numbers and actual positions I'm holding, not just theory. And we'll see you in the next one.